What's up, everyone? Brett Wallace here, your Fort Bend, Texas Realtor. Wanted to give you a vlog today, and it's on closing costs in Fort Bend County, Texas. So closing costs, there's buyers closing costs and sellers closing costs. Sellers closing costs are a little bit simpler. Usually it's the agent commissions, the title policy, and some other line item charges. So for the most part, I'm going to be addressing buyer closing costs in this vlog. And in Fort Bend County, it's going to be a little bit higher than a lot of other places because the property taxes in Texas, we don't charge a state income tax, so our property taxes are a little higher. And the biggest, I would say, one of the biggest collections at closing for a buyer that has escrow set up, which is when you put less than 20% down payment, is the pre-collection of taxes, the property taxes. So let's get into some of the closing costs in Fort Bend County. So like I said, the biggest collection of your closing costs is going to be your prepaids, your taxes, your insurance, real estate, the hazard insurance on your home, and then the mortgage insurance if you're putting down less than 20%, which is kind of what we're addressing here. You also have to get a title policy, which is where the title company does an exhaustive research to make sure that there's no liens on the property, that there's no lis pendens, mechanics liens, that there's any money or any clouds to the title. Because they're giving you, if you buy a $250,000 home, you're paying ad valorem a title policy based on the price, the sales price of the home, and they're insuring that value. And that in Texas is typically paid for by the seller. Okay, and it's given to you as the buyer. Like when you buy a used car, you get a clear title instead of a blue or salvage title, right? So the owner's title policy is given to you by the seller in most cases. It is negotiable, and sometimes I have seen buyers pick up the tab on that, but those are either during foreclosures or real aggressive negotiation. But for the most part, that's that, right? The title policy is paid for by the seller. So you have your prepaids, and what the vlog is doing is matching kind of the blog, and I'm trying to give a verbal recap of it. And you'll see that number 1 is flood certification, 2 tax service fee, 3 title search and lender's title insurance. That is kind of what I was talking about examining and making sure there's no clouds to the title. Your underwriting and processing fee, again, that's a fee that's associated with your loan. So lenders either make money on the front end, the back end, or both. And you need to get with a real estate agent because even after 12 years of doing this, I have to get on multiple screens and like compare apples to apples, and it's still a tad confusing looking at lender loan estimates. So processing origination fees, which is kind of usually 1% sometimes. Some lenders say, I don't charge any origination, we don't charge processing, or we charge this interest rate a quarter above prime, but there's no fees up front. So again, you need to find out, are you trying to get to the closing table with the least amount of money out of pocket and you'll live with a little higher interest rate, or are you that person that's like, I want the lowest interest rate possible and I don't care, if I have to bring a few thousand more to closing, cool. I want that 2.5 or 2.75 or whatever that lowest interest rate possible is. So that covers number 4 and 5. Credit report fee, $35, $45. Your credit report's got to get pulled by the lender. That's a cost you're going to pay. It's part of your closing costs with getting a loan. You pay cash for a home. No one's checking your credit. So there's a little incentive there. Appraisal fee. So if you buy a $250,000 home and you're putting down 20% and you're borrowing $200,000 from a bank, you're going to have to get an appraisal. As a matter of fact, you're going to have to get an appraisal if you're borrowing any money at all from a bank or a lending institution, because they want to make sure that the asset is worth what is on paper. The money might ultimately end up getting sold to, or your loan might ultimately get sold to a bank in Pennsylvania or New York or Delaware. What the heck do they know about property value in Houston or Fort Bend or Phoenix or LA, right? So they get a third-party independent appraiser to come out there and give them a lengthy report and pick 5 or 6 comps in the area to say, hey, the closest 6 homes in this neighborhood sold for this. Here's the average. This is what this home's being sold for. You're good to go, lender. It's a safe bet. Or hey, the contract price, it says $250, but I'm struggling to get $230,000 value. If that happens, they might ask you to bring more money to closing, which will increase your closing costs if you can't get the seller to drop the price or come in the middle. So owner's title insurance policy, that's kind of what I was referring to earlier. I know number 3, the title search and lender's insurance, title insurance. a little bit different, but the owner's title policy is the bigger fee. That's what I was talking about earlier. That's usually paid for by the seller. So yeah, there is a title search and lender's title insurance, and you can talk with your lender about that. It's not as big as the owner's title policy that the seller usually provides you in Texas, especially here in Fort Bend, but it is a fee nevertheless, and you can discuss that with your lender, or me. You can call me and I'll do a three-way call with our lender and he can explain that fully. Surveys, that is basically your site survey. Again, the bank's lending you $200,000, $300,000. They want to make sure that the property they're lending to you on, they want to see the boundary line, they want to see the fence line, they want to see the borders, they want to see the easements, they want to see the utility easements, the build lines. Like, they want a legit drawing. Have you ever seen, you drive by and you see the tripod and guys or gals out there measuring and taking notes and taking pictures and even drones to a certain extent on land. Those are surveyors, right? Our first president of the United States was a surveyor, George Washington. Shout out, right? So surveys been going on a long time. It's important. That's usually $450, $500, depending on the size of the property and the complexity of the property. It can definitely go up on acreage and bigger properties with more structures. So, but a survey is required when you're getting a loan. If you're paying cash, again, no one's going to put a gun to your head to buy a survey. Always a great thing to have. Buyers, sellers, title companies, everyone loves surveys. So that is typically a buyer cost. It is negotiable. You say, hey, we're paying full price for this home, maybe a little higher. If you guys don't have a current survey, Mr. and Miss Seller, can you buy me one for $500? Some sellers might say, cool, you're giving us a great price for our home. You're offering $3,000 over list. I'll pick up the tab on that. But for the most part, that's a cost associated, I would think, with a buyer, because if you're paying cash, you're not required to get it. If you're getting a loan, it's required. So it's kind of your doing that it's needed if you're getting a loan. So that's just my piece. Again, 10 is escrow property taxes. Again, that's what, if you're putting down less than 20%, the bank's going to want to collect. Let's say your property taxes are $6,000 a year, whether after homestead exemption or just let's say it's $6,000 for math purposes. That's $500 a month. So if you put down 20% or more, you can just write the county a check, because they figure if you're putting down 20%, you're not going to really care about paying $6,000 every January for your real estate taxes. So if you're putting down less, the bank doesn't want anyone to get behind. And escrows, honestly, it's pay every month, and it's your mortgage payment's $500 more every month. It's principals, interest, taxes, and insurance. So that's the T in it, the taxes, PITI. So you pay your taxes $500 a month, and that way at the end of the year, you're like, oh my gosh, I just got a tax bill for $6,000. Christmas just happened, right? It's every month. So when you set up an escrow account, they want you to prepay 6, 9, 12 months. They want some padding in your escrow accounts for your taxes and your insurances. So you're not just paying $500 a month and draining it to zero and paying another $500 the next month, because if you don't make a payment, that escrow account starts dipping below into the red. That's not good. So they want padding. They collect. Those are your prepaids, your escrow property tax prepays, along with your insurance prepays, your real estate insurance for your property, hazard insurance, and then also your mortgage insurance, which is a whole other video. But those are your prepaids, okay? Recording fee, transfer tax, all that other stuff. Those are line items. You have a lot of ad valorem and prepaid kind of fees. Those are your bigger ones and your closing costs. But then you have like these little $35 recording fees, $50, $3 to the great state of Texas for this fee. Like, you'll get a closing disclosure before closing, itemizing every penny of the transaction and every penny that you're expected to spend. Okay, so it will all be accounted for. Closing costs as a seller, let me go back to that real quick. When you get an offer on your home, right, you can say, hey, Mr. Real Estate Agent, can you ask the title company, or you can call them directly and say, hey, can you work me up a preliminary closing disclosure based on the terms in this offer? The closing date, the sales price, the amount of closing costs they're asking for, and you can get your net proceeds. And then, of course, whatever your payoff is, you'll know kind of what you're going to walk away with from the closing table if you sell your home at this price with this current offer. So you can always get preliminary CDs, closing disclosures drawn up as a seller to get an idea of what it's going to be. With buyers, okay, here's 3 steps, and I'm sorry I'm going long on this video. This is super important. So a pre-approval letter, Quicken, all these internet companies throw out pre-approval letters, and they throw them all up against the wall and see what sticks, okay? Pre-approval letters, Some lenders do very thorough work. They go through taxes. They go through checking, savings account statements, retirement statements, paycheck stubs, 2 years taxes. And they'll say that on their pre-approval. Like, I've looked at credit scores, I've pulled credit, I've looked at this, I've verified employment. Cool, that's a strong pre-approval letter. A lot of these hole-in-the-wall lenders or internet lenders, for lack of better terms, they'll throw up 100 deals up against the wall, and if 10 stick, hey, that's 10 closings. No harm, no foul. They're in Iowa. We're in Houston. What are y'all going to do? Fly up here and, rough me up because I couldn't close your loan? They're going to approve a lot of people. So sometimes pre-approval letters aren't worth the paper they're printed on. But with good lenders, they are. The next step is once you submit an offer on a property, okay, and you say, hey, we got an offer accepted, they're going to give you within 5 or 7 days. There's some lenders have a lot of rules, okay, especially in Texas, probably a lot of other states, but there's a time procurement. I think it's 7 days, it might be 5, that they have to give you an official loan estimate, okay? Once you get that loan estimate, the initial fees worksheet, like that is legit. When you give an executed contract, they can't vary more than a certain percentage over those quotes. So usually they quote a little high for these fees. So you might see a survey, it's 500, it might be 425. They always want to overquote, overpromise. They want to underpromise and overdeliver. So they give you a little bit higher fees just so when you get that closing statement, the week closing, it's like, hey, it's actually $1,000 less you got to bring to closing. That's what good lenders do. So, and then, the week of closing, you're going to get the workups and all the fee sheets, and it's going to be the title company is going to correlate all those fees from the lender, all those prepaids, all your closing costs, down payment, sales price, all that stuff. And they're going to put it on a closing disclosure, a preliminary one, and they're going to have to balance it with the lender and the title company. And you're going to see every penny of the transaction, okay? And they actually mandate that you have 3 days to review this before closing. So if that closing disclosure doesn't get sent till Wednesday at 12:15 a.m. and signed, you're not closing Friday, right? So, I mean, it's legit. This is enforced across the board. So it's to protect you. But once again, the key things to note about closing costs in Fort Bend, it's a little bit more than a lot of other places, but that's because of property taxes. But other than that, it's the standard stuff. We can always get it worked up for you, and you should have a good idea of what it's going to be before you get to the closing table or signing anywhere. So if you have any questions about this whatsoever, please email me through the website, call me, my cell phone's number on there. I'd love to talk to you about this. Even if you're not buying in Fort Bend or buying from me, I love what I do, so please reach out to me 24/7. Thank you so much for watching this vlog, and go out there and have a great one.